And we have a few different numbers. First of all, let's talk about the retail sales. That's the one we'll be focusing on. And basically, US retail sales is an indicator that measures retail sales activity in the United States. And we have two main numbers. We have the retail sales less autos, and we have the regular retail sales headline number. And the main difference is that the retail sales headline number includes everything, including automobile sales, and the retail sales ex autos excludes automobile sales. Now, the reason the automobile sales is a big deal here, and there's an indicator without it and with it, is because automobiles are very expensive items, and they can really throw off the retail sales tremendously. I mean, if there's a big, let's say, car brand like Ford wants to unload last year's inventory, and they run huge specials all over the country with extremely attractive financing and extremely low prices, people may buy a lot of cars, and it'll look like the economy is doing very well and the retail sales are doing very well, but in reality it's just been, several thousands of cars were being bought that were like $20,000, $25,000, $30,000 each, and obviously that could really throw off the retail sales in the country, because obviously how many little gadgets you have to buy in order to match just a sale of one car. So it's considered a very volatile component, automobiles, and that's why most economists care more about the retail sales ex autos. Now, what's been going on in the United States is obviously the housing market hasn't been doing too well. The housing prices have been going down. Housing sales have been going down. A lot of major loan companies went under. And in addition to all this, the gasoline prices haven't been going down. Gasoline prices have been going up. Okay? And man, I'm liking this Aussie USD. I keep looking at it on my account. It's at 83.07 right now. Anyway, and by the way, guys, like yesterday I went long on Aussie USD as soon as I saw it being so cheap. Sometimes we talk about certain fundamentals, like we talked about Australia fundamentals being very strong during the Australian report, the employment report, and you're welcome to look at these things. If we talked about Aussie being very strong, and at the time the Aussie was like at 83.20, and then all of a sudden you see Aussie being 82.40 or 82.50, and I'm looking at it and there's really nothing good happening for the US. I mean, it's obviously it's a decent trade, because most likely it's going to recover towards the strength of the Australian dollar. And unfortunately, I'm not there to always tell this to you and give these trades, because we only meet for the economic indicators, and there's stuff happening outside of that. So you could take a look at these things yourself. The bottom line, going back to this indicator. Give me a moment here. I want to take some profits on that trade. Sorry guys, 1 second. Okay, good. Okay, so going back to this trade. So bottom line is the gas prices have been going up also. And when the gas prices go up, obviously people have less money to spend because they spend more on gas. But not only that, consumer confidence majorly falls. I mean, when your mortgage payments are high, and then you're talking about the average people, your mortgage payments are high, your housing your housing market is not doing too well. You go outside, you want to fill the pump, and the gas prices are so expensive. You got to pay like whatever $10-15 more than you just had to pay a few months ago. All of a sudden, you start feeling less confident. And what's also been happening with the non-farm payroll numbers actually came out pretty low for the U.S. Came out at 88,000. So right now, really nothing is looking good for the U.S. The employment market is falling. They are expecting very low retail sales because consumer confidence is falling because of high gas prices. The housing market is dragging, and we saw such strength in the U.S. dollar, and that was, I couldn't understand it. To be honest with you, I was shocked yesterday when I came to see some of the prices, and obviously I looked immediately on the Aussie USD and I saw, oh my God, what a great opportunity to buy. But I was also equally shocked by the GBP USD being so low and all that. But anyway, sometimes these things happen, and I really still cannot find any fundamental reasons for dollar strength that we've seen yesterday. So bottom line is the US economy is not doing too well, it seems like, and that's kind of like that's what people are also talking about, about the US economy not doing too well. And the situation with the gas prices, again going back to the gas prices, remember gas prices are included in the retail sales. So when the gas prices go up, it's estimated that just like in the months of April alone, and this indicated the months of April, in the months of April alone, simply because of more expensive gas prices, the Americans spent $20 billion more. That means that was $20 billion that was spent less on other things. So, for example, a person could have gotten some kind of service, or they could have gotten another set of goods or whatever for the money, but instead they had to spend it on gas prices. And in addition to that, because the outlook is not too good with gas prices being so expensive, people spent even less on other things. And obviously, as people spend less on other goods and services and they have to spend more on gas, the other industries suffer, and of course employment in those industries suffers also, and profits and all that. So we are having right now, in April, we had gas prices basically as high as they were after the Katrina hurricane. If you remember, there was a big jump. And bottom line is, because of that, they are expecting retail sales to not do so well. So there were also several surveys taken from some very large retail chains, and by the way, 3/4 of all consumer spending, GDP consists of 3/4 of all consumer spending. Okay. So when the consumers are not spending, when the economy is shutting down, when the consumers are not confident, the whole economy suffers. And retail sales is half of all the consumer spending, okay? So, in addition to all this, Easter was in March this year, okay? And on Easter people spend money. So in April we had no Easter sales, and April was also actually a very cold month.